Now we're talking back in the action once again. It's about that time of day again here. Time to get back to work. It's Tuesday evening. It's April 28th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow's trading session. And I got a lot to talk about tonight. The charts are all ready, as you can see. Got some oil, some S&P, and of course some gold on the video tonight. Got a lot to talk about ahead of the big FOMC announcement tomorrow. And speaking of the announcement tomorrow, I want to check the news calendar for you guys because got a bunch of news early and middle to late of the morning. I want you to make sure you know when the big news is coming out tomorrow, so you know when to be at your desk and when to be sitting on hands to avoid those pitfalls coming ahead of the FOMC announcement tomorrow afternoon. So charts are ready. The schedule is ready. It looks like you are ready right here with me. I'm ready to go. Before we jump into the video tonight, though, I just want to remind you to make sure you subscribe to this YouTube channel. That way you never miss every update we put out every evening on this video newsletter. Also, don't forget, if you got any questions, drop those questions in the comment section below. How about a thumbs up for me tonight? If you tune in every evening to watch this video newsletter, hit that thumbs up button for me. Always appreciate you guys and gals spending your time with me every evening on this video. So make sure you subscribe, hit that thumbs up button, and drop those questions in if you have any questions. But enough of the introduction. Let's get this video newsletter underway. Let's start tonight here with the economic news calendar, courtesy of Econo Day. Now, tomorrow, of course, is Hump Day, right? Middle of the week. April the 29th. Got a lot going on this week, as we've been talking about here in last night's newsletter. The first thing we know is we're going into the end of the month, and the end of the month is always expected to be some increased volatility, right? So we do expect to see more volatility as we go into the next couple days, with, of course, the first of the month being on Friday, right? The 1st of May, May Day holiday being on Friday, May the 1st. The next couple days here, the next 2 days on Wednesday and Thursday are the last couple drops of the month. We do expect to see more volatility. We also know we got earnings coming out tomorrow before the open, after the close. So if you're in Asia, if you're in Europe, be aware of that. We're going to start seeing a lot more volatility in the pre-market, in the post-market, right? In Asia, pre-market, in London. Tomorrow, for example, right? Lots of big names tomorrow. Microsoft, Facebook, MasterCard. We'll hear from Boeing, Volkswagen, General Electric, Tesla, I see on that list on Wednesday morning. So lots of earnings before the open and after the close. Make sure you're aware of that before the open tomorrow. We'll likely see some volatility piling up. On Thursday, we get even more earnings. Tech Thursday, Twitter, Apple, Amazon, Visa, lots of big names, right, in earnings reports on Thursday, which we know is the last day of the month. So between the end of the month and earnings season coming out, we're definitely expecting to see more volatility as we go into the next few days. As we look later on in the week, don't forget Friday is a holiday, right? Not in the U.S., but places like the U.K., right? China. Big holiday on Friday, the May Day holiday, first day of May. It's not going to affect us too much for tomorrow, but I would imagine, though, that'll put a lot of pressure on Thursday's trading session. So there's also this sense of scarcity that we have come up, right, as we have that kind of holiday. Again, our markets are open on Friday, so we'll be trading on Friday morning. It's not a holiday here in the U.S., but since you've got parts of Europe and around the world with that holiday, that bank holiday on Friday, we know that's definitely going to put a lot more pressure on people, right, to find their positions and make their money on Wednesday and Thursday. So Friday's holiday puts a lot of pressure on the next couple days, earnings reports the next couple days, and the end of the month the next couple days. A lot of moving and shaking we expect here in the next 48 hours. So now that we know kind of the lay of the land as we go into tomorrow's trading session, you'll notice there are three main types of news reports. We get the 8:30 GDP, the 10:30 weekly inventory report, And of course, we get the FOMC announcement tomorrow afternoon at 2 o'clock Eastern time. Now, in all reality, all of these news reports are pretty big reports. The GDP report, as you can imagine, at 8:30, always going to be pretty big. But I think it's going to take a back seat tomorrow with that FOMC announcement lingering later on in the morning. The same thing goes for the petroleum status report. Normally this would be a pretty potent news report every Wednesday at 10:30, but we're all waiting to hear about the OPEC deadline. We talked about this last night, if you recall. On Friday they got the OPEC deadline, so people will probably be overshadowed by the OPEC deadline. I don't expect that to be much of a big boom that we usually see on a Wednesday morning at 10:30. I do expect a lot of this to really be overshadowed by the FOMC announcement. That is the big news coming for tomorrow. So we know tomorrow 8:30 Eastern time. GDP, I'll definitely be at my desk and hoping we get a big reaction to it. Usually we're not going to see much though, right, as far as a reaction to that news though, as long as we got the FOMC lingering later on in the session. The most important thing though for tomorrow is early in, early out. Anytime you've got that FOMC announcement 2 o'clock in the afternoon, you've really got most people making their money before 11 o'clock, 11:15. In my experience, on an FOMC day, on Fed day as we call it, you want to get to that desk early, make your money early, and then get out of there early, because as you start going into 11:15, 11:30, you're going to start seeing a lot of the big players in the markets. Remember, they can't get in and out of positions as easily as we do, right? Small day traders, we can get in, we can get out whenever we want. The bigger players in the market, they're more like a kind of a battleship, right? They can't really turn around as easy as us speedboats, right? Going in and out, right? As day traders. So keep that in mind. People will start to position themselves on the sidelines ahead of that FOMC announcement. And then after that news comes out tomorrow, it's anybody's guess. It really is. Keep in mind, we already know what these guys are doing at the FOMC. They've got rates at pretty much zero. Last week we heard from the Fed saying they pretty much have unlimited quantitative easing. The only thing we know is off limits, at least for now, is buying individual equities. Apparently that's the only faux pas they won't go anywhere near. But the reality is we don't really have anything. We already know what they're doing. They're throwing everything in the kitchen sink at this coronavirus slowdown. I think a lot of people are probably wondering, what are they going to talk about tomorrow? And that, I think, is going to be a big draw into people's curiosity, which of course is going to give us hopefully some big opportunities after that number comes out. So, maybe we get surprised. Maybe they come out tomorrow. I don't think they're going to say anything we don't already know, but if they do say something we don't already know, that will be kind of like an afternoon delight tomorrow, right? Probably not too close to the announcement, but by 2:30, 2:45, 3 o'clock into the close, we might get a little bit something special as we get that reaction. It's very much up in the air right now, but my number one priority tomorrow is get there early. We'll be in our trade room like we are every morning at 8 o'clock Eastern time. We'll get there early. We'll get out of there early, ahead of lunch. Let that announcement come and go around 2 o'clock. We may see a nice big move. We may also see some crummy price action because we've already kind of heard what they're doing already. So really, early in, early out tomorrow. If you're around tomorrow afternoon, we'll definitely be watching to see what happens around that 2 o'clock announcement and that big question mark, right? What will they say tomorrow? That really is the big variable kind of hanging over everyone's heads. Now, like I said earlier here, tomorrow morning, 8 o'clock Eastern time, we'll be in our trade room. We'll put the plan together tonight, and we'll trade it together tomorrow morning. I'll put a link in the description of the YouTube video here. That will give you all the information to come out and trade it with me tomorrow as a member. Our trade room is open every morning, 8 o'clock Eastern time. You got to be a member to join, and grab the link to get membership in the description of this YouTube video. So now you know the lay of the week. You know early in, early out for tomorrow in the morning session. I don't expect a lot of these other news events to have too big of an impact. Everyone's be waiting on the FOMC announcement. Will they surprise us tomorrow? Just like you, I'll be waiting my popcorn ready tomorrow afternoon to see what they say as well. Now, let's get these charts all ready to go. We get some oil some S&P. We get, of course, some gold here on the video tonight. I want to grab the oil, and the gold is looking pretty messy. Get a real challenging chart there on the gold. I'm going to start tonight, though, on the E-mini S&P. What do we know about the S&P? First of all, we know the bears have control of this momentum. That's the most important clue. That means the bears have the edge over the bulls. We also know we got that trading range. And a range-bound market tells me to buy low, sell high, and avoid the middle. I can also see these trend lines coming up. If you watch this newsletter every evening, you know how much I love those expanding triangles, and that really sets me up now for a nice area to sell off the high, but also to sell off resistance on top of that trading range. Now, it's also a good idea to look at as we go lower, because it's got a big wide open space down there to that 2,800 range we talked about in last night's newsletter. Another option would be, can these bears, can they get some sort of breakout and run this thing lower? That's another option that is certainly worth considering for the sellers. Now, getting more specific on this, let me get rid of some of these additional items here. If I can get this market going up around the high of that range now, this is where we start looking for those buyer failure patterns. I've got my level of resistance overhead. I know the range tells me I want to sell high, and I can use that level of resistance overhead as a catalyst for the entry setup. What I'd like to do is get this market up around these highs, up into that expanding triangle, and just simply look if I can catch those buyers buying pullbacks so I can sell into those stop losses. So my first setup I'm looking for here on the S&P is simply a buyer failure into a seller pullback off the high of that expanding triangle. So one thing I'm looking for is that move up. I want to see those buyers come over, get them to buy that pullback off the EMA. That tells me exactly now where those stops are, and I can now sell right into those stops. Now, another option would be as we go lower. I don't want to sell this first pullback going lower, but if I can get some strength going through that move, what does that look like? That's going to be a 1, 2, 3 breakout. 1, 2, 3 breakout. If I can get some more strength coming off of these lows right now, I can line up that low, I can bring it up to that high and can create that new channel, and then I can sell off the high of that channel. I call this a 1, 2, 3 breakout into a hidden channel pullback. Now, at the same time, there's lots of ways the buyers could participate in this as well. For example, as we try to go lower, the market's bearish, but if I can get a nested failure, if the bears try once, bears try twice, I can buy into those stops as well. Another option would be a buyer right now, be buying off the low of this range. Remember, it's a range-bound market. Range-bound markets always say buy low, sell high. So I do have the option to be a buyer on this. I wouldn't mind using that trend line. And as we come down here, think about it. The buyers, right, they need a little bit more conservative entry. They've got to give the bears the benefit of the doubt. I'm going to let those bears try once, let them try twice, and then once I've got those bears with the kind of proverbial rope wrapped around their neck, then I can buy right into those stops and run back up into that trading range. I call that a nested failure pattern. It's very similar to that buyer failure I mentioned earlier for the sellers, but because we're so bearish, 1 try for the bears, 2 try for the bears, and then I can buy back up into that range from there. It's also worth mentioning too, remember, this big collapse today was pretty much responsible from that headline from Boeing where they talked about that criminal investigation into the debris in the fuel tanks, right? It kind of came out of nowhere here this morning. I mean, for all of us lay people, it came out of nowhere. If you are obviously, well versed in the airline industry, you probably knew about it already. But for the rest of us, right, the rest of the world out there, this is a pretty startling, the headline today from Boeing about this criminal probe. It just almost immediately sunk this market. This could easily turn right back around. Boeing's got earnings being reported tomorrow. There's a chance here we may get this thing to turn around. What would a reversal look like, though? It would have to be strong move up. a pullback to the moving average, and a strong jump off the moving average. Again, we call these 1, 2, 3 reversals, or in this case, 1, 2, 3 breakouts. In that case, I'm going to mark up that high, I'm going to mark up that low, find that new channel, and look to buy that first pullback. I'm not going to try to predict the breakout because, just trying to predict breakouts, not a very reliable trade. Okay, trying to predict breakouts in a range. So I'm probably not going to be trying to predict that breakout. I wouldn't take the first pullback, but the second pullback, though, off the low of that channel, now we're talking. There's also a chance, too, we may end up just racing higher here. I mean, there's a chance of it. If they just rip higher here, check out that 2-try trap pattern. So if it really races higher, you'll notice that shallow pullback won't pull back to the moving average. Once you get that little higher high up there, little trap low, I call those 2-try trap patterns, one of my favorite patterns whenever I see a real strong move. So again, ideally it's the 1, 2, 3 breakout, but every once in a while we get those strong punches higher. We can grab that 2-try trap pattern. So boy, we've covered a lot here so far. We've talked about failures, nested failures, breakouts, reversals, right? Trap patterns as well. I want to make sure you get a much deeper dive into this. Don't forget, tomorrow morning, we're going to trade this stuff together in our trade room, 8 o'clock Eastern time, every morning, Monday through Friday. If you're not there with me tomorrow, though, the next best thing is to grab our free trading course. That way you can learn all my favorite setups. You can see lots of examples of how we apply them as part of our 3-step strategy. So again, the best place to be tomorrow morning is as a client in the trade room. If membership isn't quite right for you right now, or if you're here for the first time, grab that free course linked up in the upper right-hand corner. And again, I'll put all the membership information down in the description of this YouTube video. All right, I think we're looking pretty good now. We got the buy side covered. We got the sell side covered, right? Remember, we're bearish, so a little more conservative for the buy side right now. Let's keep this party rolling. How about some oil here? How about some oil? Jumping into oil. Boy, so much to talk about on the oil market right now. What do we know about oil? We know there are really 3 main components. We know that there is a lot of bearishness in this market, right? People are filling up tankers of oil in their backyards right now because we're swimming in this black gold. So the oil market is saturated. We know about this. This is not news. You know this already. Very, very overall bearish, not just technically, but fundamentally with everyone on lockdown, the economy really struggling to kind of fire on all cylinders again. A little bit of a pun intended there, but that's the point, right? We're bearish. We know we want to be sellers in these bear markets. The next thing is this range. And this is the same range from last night's newsletter. You'll notice this range continues to be a magnet. What does a range tell me? It tells me buy low, it tells me sell high, and it says avoid the middle. The third, I think this is the most important clue, is the rotation off of the low. And we talked about this a lot today in the trade room. Whenever I have a bear market down into a range, the strategy is pretty simple. I like to look for buyer failures right above the high and sell back down into that range. But there's a very big difference when you have a market that goes through the low of the range and then begins to rotate and goes higher. Because what you have in this situation is it's a lot of momentum. And to make matters even worse for the bears here, we have a rising support trend line there as well. So when you look at the oil chart here, you're going to see this. Yes, we are still bearish overall, but this momentum now is really starting to look stronger for the bulls. What I call this is we have a bullish rotation off the low of that range. And I'll tell you, this may lead to some real headaches for these bears because they've got that rising support in their way. This may also obviously result in a complete breakout and a complete reversal as we go higher. It's a very big important part of this. So we know we're bearish. We know the bears are going to be trying to sell up above the highs of this trading range. We know the range says sell high, but we have this rotation now coming in off the low. And honestly, if we're not careful, we could easily get our pockets picked and be selling right into this rising support And in all honesty, I'm more inclined here to look for that run higher, right? Back up to fill that 17 gap, right? Back up into that range where we left off last week. That's exactly where those buyers are really hunting for. At first, they'll try to get that pendulum swing, but I would imagine if they can get that pendulum swing, there's going to be a lot of momentum here carrying it up to that 1700. Now, at the same time, remember, you've still got those lows down here, those big crash lows at $7, $6.50, right? For those bears to go hunting for. We got big inventory report tomorrow, and that may end up really kind of that inventory report may send this market lower. Again, we've got that big OPEC deadline on Friday morning. So let's put the plan together here. Where are the best setups right now? If I want to be a seller, this is going to be tricky because I've got to get up into resistance here overhead. If I want to be a seller, I've got to get up into resistance. And if I can get up into resistance, again, I would normally look for a buyer failure into a short off those highs. I would normally say, we'll wait for the price to go higher. Wait for these buyers to try to buy the pullback, and we sell off that high, right? This is a very typical setup whenever we have a trading range. But now we've got a lot of momentum, and now we have that rising support. So really the only way I can get short off this high is to look for what's called a nested, but I do need a trap at the high. So it's almost like a crown reversal pattern is what I need on this. It's there's a lot you've got to worry about, because if you want to be a seller up at the highs here, you've got to be worried about that support trend line, and that support trend line is why I want that trap. Traps are the most important setup when you're trying to avoid those rising support trend lines. And we've also got a lot of momentum. And because the buyers we assume are going to be with the wind at their back at this point, we can't just get too aggressive with selling into their stops. They're probably not going to give up without a fight. So I definitely think that nested failure with a trap, it's pretty much a crown reversal pattern to sell off the high of that trading range. Now, there is potential here. There is potential if this market was to go sideways for a while. Okay, that would really be the saving grace here for these bears. Let's just say, for example, that we don't finish off this rotation. We don't rotate from the low up to that high. Let's just say, for example, we end up sinking back down and we go sideways here for a while. That is the dream come true for the sellers right now, because now what I can do is, if we start going sideways here, that now blurs. It's no longer that channel any longer. Right now, if we start going sideways, this absorbs a lot of momentum. And now I can get back to my normal game plan, which is waiting for the price to go up, waiting for those buyers to come in and try to buy that breakout pullback. These most often they'll fail and come crashing back down again. And that's exactly what I look for. I'll look for those buyers to buy the pullback, and we'll look to sell right into those stop losses. A very simple buyer failure pattern above the high of that range. Now, again, as I mentioned earlier, there's always potential this thing falls apart and we run lower. As a seller, I can obviously look for a 1, 2, 3 breakout. I would not try to sell below the range. Remember, if you're below the range, you want to buy low, right? Sell high, buy low. If I want to sell it as it's going lower, I need a 1, 2, 3 momentum move. I called those 1, 2, 3 breakouts. I'm going to mark up that low. I'm going to mark up that hidden channel high, and I can sell off the high of that channel. A 1, 2, 3 breakout into a hidden channel pullback. Also keep in mind too, if it really starts to sink like a rock, if it really tumbles, strong move down, shallow pullback, lower low in price, that will give us that trap for that 2-try trap pattern. Just remember, I do like to always try to find some additional level of resistance to combine with all of our setups, right? Especially those 2-try traps. So 3 options I'm considering right now to be a seller. Now, how about being a buyer? There's really 2 basic situations I'm looking for to be a buyer. One of them would be a 1 back up here, a 1, 2, 3 breakout for the bulls, right? Just like the bears need a breakout, the bulls need too. The bulls definitely have a little bit more momentum at their back right now, which I think combined with that rising support trend line will make that a lot easier. You definitely can't pick a bottom on this though yet. It's going to be a little bit risky to be trying to buy it right now, but if they can hold that pullback, give us some strength coming off of that moving average, now I can mark up that high, mark up that low, and I can buy that pullback off of that low. At the same time here, if this market really races, right? If it really starts to sprint up around that 1700, if it really races as we go, look out for that shallow pullback. Right? That shallow pullback, that higher high. Shallow pullback, higher high, trap low, horizontal line there, trap low. Yeah, that's what the good stuff is right there. We call those 2 try trap patterns. Really reliable patterns, but again, you got to get that big move going higher. And again, don't forget, I cover all of these patterns in that free trading course that I mentioned earlier. It's linked up in the upper right-hand corner. I'll put all the membership information too in the description of this YouTube video. Now, can I buy underneath this area? Oh, absolutely you can. You just got to make sure you do it the right way, right? That's the key. We know we're bearish right now. So if the market runs lower, I can't get too aggressive. I can't just look for that seller failure and buy into those stop losses. It's just not going to be as reliable enough, not when you're going against the overall bear momentum. If I can get this strong move down, then I start looking for that nested failure because I'm going against momentum, right? It's a 1 try for the bears, a 2 try for the bears. Then once those sellers have dug their own grave, I know exactly where their stops are, and I could buy right into those stop losses, right? That would be a nested buyer or a nested seller failure off the low there. So really plenty of ways we can buy this, plenty of ways we can sell this. I think the biggest clue, like I mentioned earlier, is definitely going to be this rising support right into this channel and this rotation coming off of that low. A lot of momentum right now for the bulls. Not enough yet to buy right now, but certainly some opportunities here for the bulls. Be careful if you're a seller. Look for that 2 try, that nested failure with that trap, right? To make sure you're not getting too close for comfort, right? For that rising support. All right, we look great on this. Let's keep this going here now, wrapping things up with what might be the most difficult market of the day tomorrow, and that, of course, is the gold. I think I had a couple clients today ask, why is gold so weird today? It's because tomorrow is the FOMC announcement. With the FOMC announcement tomorrow, we do expect gold to be a little bit weird. And the most important thing to remember is early in, early out tomorrow. We do expect gold, though, to be probably the most difficult of all the markets on an FOMC announcement day. What do we know besides the nasty price action? We know we have a bear market into what honestly looks like a range, but it's more like an expanding triangle. There's definitely a range in here. Again, you can see we're bearish. And anytime we have a bear market, I want to be selling. I want to be selling up at resistance. And you can see where my favorite setups up here, right? Up at a level of resistance, we go up. The buyers try to buy the pullback, right? And we sell right into those stop losses. They've been doing this to these buyers all week this week, right? This is exactly the pattern we look for above the top of the range. But again, you'll notice the range isn't as clearly defined. We know we're bearish. I want to be a seller at resistance. We know we have a range. Ranges tell me to sell high. They tell me to buy low and to avoid the middle. Now, this is a little bit different type of range. This range you can see here is a relatively wide trading range. And these really wide trading ranges, I use much smaller sell zones and buy zones. We'll talk a lot more about that in our video classes here at School of Trade, why we do it that way. But I think the biggest thing right now, though, is it honestly doesn't look like that great of a range because we go down, we go up, we go down, and we go up. What do you need for a range? You need double bottoms and double tops. We really don't have any double tops right now. We definitely see double bottoms, but I don't see any real double tops. I can't count that one back there. So I've got the range on here, but in all reality, it's more like an expanding triangle. Now, expanding triangles are great the first couple times you buy low and sell high. But just like we talked about on the oil, think about momentum, because as we start going back up into the high of that triangle now, this is going to be a lot more bullish than we think it is, right? It's going to be a lot more bullish here than we'd like it to be. So really at this point, these battle zones are really right up around this area, right up there, right? I want to be selling off that top, at least getting up around that high. Same thing to the downside, right? The battle zone here, I want to kind of split that off there, and it's really going to be like that area down to that area right there. It's these edges of this triangle. Now, again, the big deal here right now is momentum. I know we're bearish overall, and I want to be a seller, but as we start running higher here, again, you're going to have a lot of buyers who are going to think this market is bullish, and they're going to trade this like a bull market. And so at that point, I'm going to be a little bit more careful, right? I'm going to wait for what we call a nested failure to sell it off the high. I want to be a seller off the high of this range, but that momentum, the width of this triangle getting wider, gives those buyers a lot more wind at their back, and therefore I'm let them try once, let them try twice, and once I can get those buyers trying once, trying twice, then I can look for that short back down into that trading range. At the same time here, I can also get ready for, right, that reversal, right? So as we go higher, if they just jump off of this moving average, right, they didn't do it before, right? Didn't do it before, they can easily get control of this market. Once I see that 1, 2, 3, and they jump off the EMA, then at that point now, I can mark up my highs, I can mark up my low, and I can find my hidden channel. I could buy that 1, 2, 3 breakout into hidden channel pullback. Another thing to keep an eye on would be if this really gets cooking. If we really jump off of that moving average now, keep an eye out for that shallow pullback, that higher high, that trap low with that 2-try trap pattern. Again, I always like to make sure I incorporate some additional level of support on that trade. So as the market goes higher here, as the market goes higher, sellers, careful. 1, 2, and then back down. Buyers, if I can get some strength running higher, get through the top of that range, find that hidden channel, and I'm buying off the low of that hidden channel. My target right now for those buyers, that target all the way up around that 1750 high, right? That big range high up there, 1750, 1755. That's my big objective here on the yellow metal. At the same time here, keep your eyes on the lows. This is going to be a tricky spot going lower. The buy side's pretty easy here as we go higher. Can I sell this thing as we go lower? Remember, this is that big range we talked about in last night's newsletter. There's a lot of support down here, which means anything that goes lower, we're going to really have to see a lot of strength down here to get the confidence we need to sell this thing short. What I'm thinking is, if I can get this market to make a nosedive around the low of this expanding triangle, it's going to be the same basic idea, right? We want to be a buyer off of this low. The momentum will be so strong, though, that we've got to be careful. We got to let them try once, got to let them try twice, and then I can be a buyer now going back up into that trading range. Or let's say they do hold that pullback, we get that strong move down, they hold that pullback and really run. This is where you've got to be disciplined here. They've really got to make a strong run. If I can get that strong 1, 2, 3 breakout, I can mark up that low, I can mark up that high, and I can look for that next pullback right off the high of that hidden channel. Be very careful though. It's really got to be kind of a blow your hair back, right, type of moment here as we go lower. 1, 2, 3. It's really got to be a strong move down here for me to have the confidence to sell down there, because again, you got all of that support level waiting as we go. So the most important thing right now on gold is the expanding triangle. Expanding triangles are great when the triangle is relatively narrow. But as we start getting more momentum now, back and forth, it's 1, it's 2, back down in. We go down, 1 and 2, back up in. Pick the edges, buying low, selling high, watching for that big strong run, finding that hidden channel, buying that low. Or again, very important, we get a real strong push through those lows, right? Find those hidden channels and sell off that as well. Don't forget too, if we end up back in the middle tomorrow, of course, being an FOMC day tomorrow, stay out of that middle. Honestly, that would be probably the easier route. If it just starts to sit right in the middle like that, now momentum chills out a little bit, and now we can go up. Let those buyers come in, try to buy the pullback, and sell into those stops. We can go down, right? Let those bears try to sell the pullback and buy into those stops. We can go back to your typical buyer failures, seller failures, buying low and selling high, using stop losses, right, to run those stops, and use the magnet. Remember, use that range as the magnet. But as of right now, though, we've got to see some more proof of this trading range. It looks like it's more of an expanding triangle, and the bulls look like they've got the wind at their back if they can get this market up to the high of that channel. All right, so now the plan's looking pretty good. Don't forget, tomorrow morning, 8 o'clock Eastern time, if you're not there with me, grab that free trading course. And speaking of which, don't forget, tomorrow morning, 8 o'clock Eastern time, and every morning, Monday through Friday, we'll be right in our trade room, 8 o'clock Eastern time. Get registered. Come out and join me as a member tomorrow morning at the opening bell. It's so much easier to trade this stuff when you're looking over my shoulder. I can answer questions, show you how to do it the right way. It's so much easier, right, to do this with a group than doing it on your own. Don't be afraid to call me in the office if you have any questions. Call that toll-free phone number. I'm more than happy to walk you through the steps of getting registered here tonight. Use that live support tool on the right-hand side. And as always, guys, don't forget, if membership isn't quite right for you, at least grab the free course as part of our free trial. You'll learn all my favorite setups. We'll see lots of examples of how we apply those setups to our favorite futures markets, and of course, right, all the details about our favorite trading strategies. But that's it for me tonight, though. I'm off for the rest of the night tonight. I'll be checking questions after we finish the video tonight, so drop those questions in, hit that thumbs up button for me, and don't forget to subscribe and get registered for tomorrow morning's trade room. As always, guys, we'll see you tomorrow morning. If not, come back and see me tomorrow night on the next edition of this newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.